Okay, so post-balance sheet events are simply draw up a timeline, write the actual year end at the beginning, when the annual financial statements are released, is here, and basically, everything that happens between the time of the year end and when the annual financial statements are released is what we call a post-balance sheet event, generally. And basically it just means that after balance sheet date, you've got things happening. The auditors are in the process of doing the audit, and basically they'll only have the financial statements ready after a couple of months, perhaps, depending on the size of the company. So what if you, for example, at this point here, you find out that you've then found a few invoices that haven't yet been processed, okay? So you find that they're dated the 16th of June, and you actually should have put them through, and they are material. So what do you have to do in that position, in that circumstance, is either, we basically have two types of post-balance sheet events. We have those that are adjusting, and we have those that are non-adjusting. So basically adjusting post-balance sheet events are those that existed at balance sheet date. Okay, at balance sheet date. So when I say existed, these invoices were in fact for before the year end. They existed because of a sale that took place before year end. So therefore we need to then make an adjustment. And obviously the adjustment in that situation would be, generally you would credit sales and debit accounts receivable. So you're putting through the item that you hadn't put through, but you've discovered after the year-end date or after the balance sheet date. You've then got to adjust because of the fact that that sale actually took place before year-end, and therefore it existed at balance sheet date. The other item that is a non-adjusting event is, for example, say we have a fire that takes place around this time, so it's after year-end, but it's before the annual financial statements are released. Okay. Obviously we have this time lag because of the fact that we have to have the financial statements audited before we're actually going to release them. Okay, what if you have a fire at this point? This fire has only actually existed after year-end or after balance sheet date, and therefore it's what we call a non-adjusting event, which is basically because of the fact that it's not something we forgot about and then have to put in later. It's something that's actually taken place after the balance sheet date. So it's a non-adjusting event, and what we have to do in that situation is we have to actually draw up a note. It did not exist at balance sheet date. So we put in a note to the financial statements, and basically the reason why we put in a note to the financial statements is simply to inform the shareholders that there has been a fire. Obviously it's not actually affecting figures up until 30th of June 2016. However, it's obviously information that will be of value to the shareholders, and we need to obviously inform them of any relevant information that we are aware of so that they can make appropriate decisions.